everybody to the Daily Market Commentary. My name is Charlie Fulkerson, joined by my dad, Bruised Leg, Chuck Fulkerson.
Thanks, Charlie. Yeah, my leg is bruised because my 6-year-old decided to punch me. For 3 days in a row, he thought he would practice using my leg as a punching bag, but that's what 6-year-olds do. Welcome, everybody, to the Daily Market Commentary. Hope everybody had a great trading day yesterday. I was able to end my travels a bit early, so I'm glad that we're able to record today. Lots of stuff to go over. For those of you new to the channel, do me a favor, click that subscribe button down below so that you get alerts as they come up every day. For those of you that are new, we look for turning points and potential breakouts in trades. But the key is we leave our lines on the charts. It holds me accountable, it holds you accountable, but most importantly, from an educational perspective, it shows us how these levels hold up over time. So let's dive right in. So first, let's look at the S&P, and I've got an awesome co-host here today, so we'll use him a little bit to talk through some of the stuff. But looking first at the S&Ps. Now, the ES is the level that we'd identified, and we talked yesterday about looking at this potential reversal going forward. And now I used a confirmation style entry when looking at this. And the reason for the confirmation style entry was because we'd come up to here twice before. And twice before we got, we got a pretty strong move out of it the first time. We got a fairly weak move out of it the second time. We're now into it the third time. I would anticipate an even weaker move out of it this time through. You may already be short on this, but this is what we would consider the top of a slide, right? So the top of a slide, price starts moving straight down. Charlie, you know who takes over at the top of the slide, right? Who takes over the top of the slide, Charlie?
The bears.
And when the bears take over, what button are we going to press?
Sell.
All right, so we're using the sell button when price gets up here. I don't see that there's a tremendous amount of movement as price comes out of here. I think that we've only got a little bit of movement maybe down into this region here, so I would be fairly tight on it. Now, this is the S&P level. The reason I'm not as high on this level today is because we are bouncing off of the Nasdaq level we identified yesterday. So yesterday we talked about this little area here being a potential reversal point, and the markets traded down and have bounced off of that level and have been moving off of that level in the overnight hours. So taking a look at this on a bigger picture time period, let's call this a 4-hour chart. Now on the 4-hour chart, I want to draw a potential breakout line right here. Now this line, if we've bounced off of it a few times, is acting as a potential ceiling. Charlie, which way is the market going if it's bouncing off a ceiling?
Up.
It's going up. And if it breaks the ceiling, it keeps going up until it runs into a new what?
Ceiling.
Yeah, so it's going to continue to go up until it runs into a new ceiling. Now, I don't know if I've got a huge room to roam on this breakout, so just be aware of this. This area up here could act as a stalling point. So maybe take a look at your own risk tolerances on this one. This one may or may not work out for you based on your risk tolerances. So we may want to stay on that smaller time period and looking at this on that just off of that hourly chart. And when you look at it off just the hourly chart, using that same line that we just looked at on the 4-hour would be above this region here. So we're not quite there yet. There's still room to run from our entry down here at 67.80. Now, I would probably take a look at moving that stop up below 68.13, locking in 33 points of the S&P, or excuse me, of the Nasdaq. Not typically going to be a bad day. A good way to start your day if you were able to catch that reversal trade. Now, looking at crude oil, this one did not work out so well for me. Price came into the level, and I did anticipate that this one would work out. I felt like this was a pretty good area, pretty good opportunity. We blew right through it, came down to the level below it, where we got a really strong bounce off of that level. So I was a little bit surprised on that move. Sometimes that's going to happen. We just got stopped out on that particular level. Looking at a potential reversal point today as a chance to get back in. Moving out to this 4-hour chart, we are overextended up here, so I'm certainly not going to be buying it at this point. You might want to buy somewhere on a pullback, and a lot of this had to do with what happened yesterday from a geopolitical standpoint. So a lot of times those geopolitical announcements will blow through what is typically going to be a quality level, and that's what we had happen here. Went to a level just below. Gold No surprise, still in between our region here in gold. Now, for those of you that are more longer term, bigger picture traders, you may be able to utilize this as a way for, longer term breakout style trades. For day trading, this is tough sledding unless you're on really small time frames. And I really try to stay away from those super small time frames. So gold, we've still got our areas in place. Nothing has really changed since we identified those regions, and we're just going to leave those ones in line where they currently stand. Let's move over to the bond markets. Now, in the bond markets, look at this. We have this floor set up right here, and what we've talked about more than once, if price goes through the floor, which direction is it going to go, Charlie?
Down.
Right.
That's the opposite of up.
That is the opposite of up. Very good. So when price goes through a floor, it goes down until it runs into a new what?
Floor.
Into a new floor. So we have to find out where would our new floor be in the bond markets if we break through this 118. Now remember, and I talked about this yesterday in the euro, sometimes a breakout, you don't get a second chance at a breakout. A lot of times we want to take the retest of a breakout, but the retest may not come, and that's really what I see here in a number of instances. Because we keep our lines on the charts. A lot of these, remember, these blue lines represent where we had a breakout, and then these green ones would be the reversals. Well, we haven't gotten a chance to get back to most of these reversals. So when I look at this on a daily time period, I've really actually got to go back to the weekly to see where's our next floor, right? If we break below here, our next floor is not until way down here, which is fairly far away. So for those of you that are looking more for a longer term style of trade, if it breaks below this blue line acting as the floor, it's probably going to keep going which way?
Down.
Down.
It's the opposite of up, and I already told you that.
I know, you already told me that. I just like to keep you involved there, buddy. So here's the Aussie. So the Aussie dollar is we had a breakout trade on the Aussie that unfortunately I didn't have marked, and we've moved down nicely from that breakout trade. Had a little bit of a rally back up in the overnight hours that may give us another bite at the apple. And when I say another bite at the apple, it could give us a chance to get short somewhere up in here. So keep that area in mind later for later today. The euro, we have that level marked off up here. Remembering that this euro, this would be the top of a slide. And at the top of a slide, what button are we going to press, Charlie?
Let me think. Oh, yes. I already know. Sell.
Very good. We press the sell button at the top of a slide. This is one of them that we had the breakout set up. If we missed the breakout, this is the retest of the original breakout area. So giving you a chance to get back in and short somewhere up in here. Now, if you're a little bit more risk averse and you don't want to get in on this short, then you could take a confirmation style entry. One thing I will point out is that we may not get there based on the trend line, right? If I just throw a quick trend line up here, we are sitting right now at what could be a reversal point. So if you wanted to go candle-to-candle style of trading on the hourly chart, this wouldn't be a bad time to do so. For those of you that remember the candle-to-candle style of trading that we've taught in the past, it's looking for the next lower low on an individual candle basis. Canadian dollar, we are up into that level as we speak. We have a very limited window for reversal on this one, so this one is in play, and we'll update the Twitter feed as that one continues to move, but that one is in play right now. Very small level, super tight amount of risk on this one. Last, certainly not least, British pound, Japanese yen. Our copper position, we came into our copper position yesterday, got below it, and now have just kind of chopped around that area, so we're going to remove this line as that one was not so healthy for us. Still have our level above us in the Great British Pound. And then the Japanese yen, I will say, I wasn't sure about it yesterday. I feel much more strongly about it today. I think if we break out above this line here, then there's a long potential all the way up to this region here, or at the very least right in here with this level. So this is a potential area to get long if the Japanese yen blows through some of these sell areas. It may have a hard time getting through some of these sell areas, but this area up here acting as a ceiling. So for price to continue to rise. So before we log off, I want to thank my awesome co-host with me here today. We're going to wrap it up. Charlie, anything else that you want to say as we wrap it up?
We will see you again, everybody, with the name of Charlie Fulkerson, joined by my dad, Bruised Leg, Chuck Fulkerson.
Ouch.
That was a punch.
Ouch. All right, we'll see what I get. I get punched in the leg. Thanks, everybody, for joining us. We'll see you tomorrow. Later.
See ya.